on every life insurance policy, there's three parties. There's the insured. That's obviously the person whose life is being checked out, and when they die is when the death benefit will be paid. The owner is the one who controls the policy. That means they could change the beneficiary. They could decide whether they want to cancel the policy, whether they want to pay more or less for the policy. The beneficiary is the person who actually receives the death benefit. So in certain cases, the owner and beneficiary could be the same person. Let's say a husband buys a policy, his wife could be the owner and beneficiary of the policy. Sometimes the husband's the owner of the policy and the wife's the beneficiary because the husband wants to have the ability to possibly change the beneficiary in the future. So sometimes you have different parties to it. There's a thing called the Goodman Rule where there could be adverse tax consequences when there's three different parties. The owner, the insured, and the beneficiary, actually three different parties. Generally, there's going to be at most two parties to a life insurance policy between the owner, insured, and beneficiary. Well, a sales illustration is very important. If it's term insurance, it's going to be pretty simple and straightforward. If you buy a 20-year term insurance policy, it's going to basically show you that for the next 20 years, you have a fixed guaranteed premium. What may not be clear on the illustration of its term is how many years you have until you have to convert the policy. By convert means convert it into a permanent policy that goes on forever. The reason you would want to do that is if your health has changed and you don't want the policy to end. So that's one thing you need to be careful with in a term insurance policy. If you're buying a permanent policy, there's so many factors involved in a sales illustration. Is the premium guaranteed? Is the number of years you're paying the premium for guaranteed? Is the death benefit guaranteed? So you need to look through and check these things out because you may be buying a policy that you think's cheaper than another one, but when you get deep into the sales illustration, you realize that a lot of it is not guaranteed, while the other policy may have total guarantees as to premium and death benefit, and sometimes it may be worth it to pay a little more to have something fully guaranteed. If it's not fully guaranteed, then you really need to understand what isn't guaranteed. Can they raise the cost of insurance? Can the interest rates change? Could the rate of return I'm getting or dividend change? And then you need to see the illustration run at different projections that aren't as advantageous to you to see how it performs so you see what you could be getting yourself into.